And welcome back. You're still watching Closing Bell Southern Africa. Next up, the first half of the year saw markets navigate an environment characterized by a slowing global economy, rising interest rates and inflation. Now, to take a step back and review just how markets performed, as well as to look ahead to what investors are doing in navigating the tailwinds and the headwinds for the second half of 2023, is Nigel Green, CEO and founder of deVere Group. So, Nigel, let's start off with the half year that was. Significant headwinds. So how exactly have markets performed? I want to know best performers in terms of sectors and worst performers.
Okay, it's a good question to start with. We're halfway to Christmas. How crazy. So halfway through the year. And I think we expected the markets to struggle this year. But in actual fact, they've done well. The economy's been more robust than expected. And of course, we've seen the spectacular rise of tech, certainly companies that have got AI and have taken advantage of it. So some of those stocks have done extremely well. So that's been the star sector. The sector that struggled in particular has been the banking sector. So we've seen the biggest ever banking crisis since Lehman's 2008, and that, of course, has caused concern, still causes concern in the banking community. Overall, you've got world markets up 12%, S&P 14% this year, and we're looking forward to the unexpected in the second half of the year as well. There's going to be, of course, some things happening in the world, and of course, we can discuss those things, and we can guess what's going to happen for the next 6 months.
Yeah, indeed. Now, speaking of some of the sectors that have done incredibly well, oil markets, but also technology. I mean, we saw that trillion-dollar valuation come through. I don't even know how to characterize this. High, elevated levels of valuations. How is the market reacting to this? And actually, what's your analysis on this? Are we likely, I mean, are these valuations firstly at the right levels? Are we likely to see a correction come through in the second half of the year?
I mean, some of the valuations are extremely high. However, you know, are you using AI yourself? Are you using ChatGPT? I guess that's the question. So I believe that ultimately AI is going to be very successful and it enhances people's work. So people that can use it, I think they can work more effectively. Massive uses for it. Is there a correction? Probably at some stage. I think that's fair to say. I mean, the video is selling at 200 times sales earnings. That's a very, very high multiple, but it's got massive potential. So, you know, I'm going to sit on the fence on that one. I think that long term it's going to do well. However, I do think that it's really at the moment a stock that doesn't have too much competition in certain areas of the chips that it produces. I'm expecting it to have some competition. So I'm not a buyer. I'm a fan, but I'm not a buyer.
Okay. Now, moving into the second half and looking ahead, most developed markets are likely to experience the lag effect of a monetary policy tightening. Now, in this environment, where do you then put your money? I mean, how are investors navigating the environment that's to come?
We've seen a massive increase towards fixed returns. So money market accounts in particular have been very, very popular, particularly in the last few months. In fact, we're now at an all-time high as a percentage of investment is in money market accounts. So it's actually over 30% of people's portfolios is in money market accounts right now. The highest since 2006, which was just before a recession. So I think people are concerned. So that is one place to put your money if you're concerned about the markets. And let's be frank, if you're worried about the volatility, you're actually gaining a good return. There's still opportunities, and I look at particularly the banking sector as an example. So even though it's done badly in the first half of the year, I think that certainly the major banks, the larger banks in America are going to be actually doing better. They're in a good place. The rates of interest are enough for them to be able to charge and make a profit. And people are moving from the smaller banks to the larger banks. So again, I like that sector. I think there's countries that are likely to do well. I noticed recently Warren Buffett, and you can't ignore him, he has invested heavily into Japan. Low inflation there, low interest rates. Japan did really well during the 80s. So I actually think that that's a good place for people to look at as potential. And there's countries, Africa, you'll look at particular countries which have got opportunities. I think Mauritius can take advantage of its position where people are moving there and invest in there. So I think there's opportunities when you dig in and you look at what's there. The speculative is, does AI continue? And I don't know the answer to that one, is the honest. Even on a Friday afternoon, I wouldn't want to speculate. But some people will, and of course that's their choice.
So looking at, let's say, US markets, we're saying into fixed income, bonds, out of equities. What about cash?
I mean, some on the side is always good. So, for me, I like 80-20. Okay, I like 80% of my money in steady performing and then 20% conviction. So 80% diversified. And then I'll go with some of my money into things that I think are really going to do well. So that's kind of a style. Different people have different styles, but I quite like that. You got 80%, nice and steady, diversified portfolio. And then there are some things, I just mentioned banks there. You might put a percentage in those. So areas that you feel you've got some conviction in, that should be a percentage of your money if you invest in that particular style.
And lastly, what are we staying away from? Where is the money exiting?
The money is exiting. It's actually exiting, quite surprisingly, some of the areas that you'd expect would do well. I mean, healthcare's actually not done well. So that's partly because obviously those companies made money during COVID. And so therefore that income, if you like, has fallen away. You'd expect healthcare normally to continue to do well. People are concerned though, right? So there's a lot of money on the side. So you can take that either way, Tanya, on a Friday afternoon. If you imagine there's a wall of money ready to go in the market. If interest rates do go down, which I believe they will before the end of the year, then that money is going to be invested, and then you've then got the bigger opportunities. So I think that's where probably the opportunity is. I also think that, you see it in lots of countries in Africa, they're resilient. And I think people forget how resilient people are, how resilient companies are. They do adapt. And sometimes we write off people, countries, and we don't realize people are actually resilient. And I think that's important. We are in a more difficult, challenging environment, but some people will come through as individuals and companies and be successful because they have that resilience.
Absolutely. Well, that is how we wrap up. Unfortunately, we don't have more time for this. But Nigel, thank you so much for joining us today. That was Nigel Green, CEO and founder of